Hi, this is Paul Hitchcock. I'm really excited to have Jorge Gomez here, who is a tax professional. Welcome. We're just going to jump right into it, Jorge. You and I were talking offline a bit about Section 199A. What exactly is that, and what do we need to know?
Okay, with the new tax reform of 2018,
Right.
As you know, the government reduced the corporate tax rates, mostly for C corporations, regular corporations, and then to give some benefit to pass-through entities such as S corporations, partnerships, LLCs.
Right.
The government implemented the Section 199A, which is basically a benefit and the deduction of the taxable income of pass-through entities that goes into the personal tax return, and it gives you up to 20% of that deduction. It's
Wow.
not a credit, it's not basically an expense deduction or anything. It's basically a reduction of your taxable income based where, the calculation of the tax liability is less because it reduces it up to 20%.
Well, you said what's a pass-through entity then? Like, does this apply to everything, or what exactly?
No,
is it?
pass-through entities in the tax world are companies, like regular companies, but instead of at the federal level, instead of reporting all their income and being taxed at the corporate level, all the profits and losses flow to the personal level of the owner.
Okay.
Basically, it's a way to eliminate double taxation for a small business here in America. Some states, also have that benefit. California charges a little bit of tax, but for the most part, all the profit and losses flow.
Oh, I got you.
Reducing the tax liability. So you won't pay twice.
You wouldn't pay twice, which is a good thing.
It is a good thing, yes.
And so give me an example of a business, like give me a case study of a business, just briefly, that this would apply to.
Okay, I have a client. It's a S corporation.
S Corp, okay.
S corporation, which is a pass-through entity. What we're gonna have here is that all the profits are gonna flow to the owner's tax return.
Okay.
And here we're gonna have to calculate that deduction, that 20% deduction, to see how much we can take, because there are certain limitations about the income.
Oh, there are.
If you're married and you make, I think, around more than $350,000 and start reducing and then disappear. So here the challenge is to get the clients within that range to try to maximize the deduction as much as possible.
Okay. So if I'm a business owner and I say, hey, this sounds like a pretty good deal, 20% break, I want to find out if it applies to me, what is the process? Do you take them through an initial assessment of this?
Yeah.
Collecting tax
If it's a client, I pretty much know their situation.
Yeah, let's say I'm brand new. I'm brand new coming to you. Yeah.
Okay. I would request first, I like to review the last 2 years tax return, but also the financial statements for this year to see how much potential taxable income is coming from this pass-through entity. It could be an S corp, an LLC, partnership. Then when I have that, what I will do is, based on the personal situation of the client also, estimate the tax benefits.
Right.
This is the first year we're gonna do it. Still, the IRS is providing guidance on how to do it, and then I will calculate that potential deduction for the client. There is a worksheet that we use. We do the calculations based also on certain criteria, not only the amount of income that flows, but the personal, if you have salaries or other income in the personal tax return, and then we'll estimate the total deduction for the client. If we can get it, we just doing the mechanic of the tax return, fantastic. If not, we will go ahead and see which way it will imply a little bit of tax planning at that moment.
Mm-hmm.
See how can we get that deduction if it's possible.
Right.
We will do that work.
Great information. I know there's a new tax plan out. There's a lot of questions.
Mm-hmm.
We're getting into tax season now. I know you're getting
Yes.
busy. So my takeaway is Section 199A. If people are wondering out there, it's a great idea to get in contact and run the assessment. Would you say that's a good takeaway?
It's a good takeaway.
Great.
Yes.
Awesome. Jorge, thanks so much for being here.
Thank you.
All right, we'll see you next time.
Mhm.
Thank you.